to the Monday morning of the new year, and this is going to be one of the most interesting ones we've ever had for lots and lots of reasons. One of which is that risk management is so strong and should be so strong a factor in our future, and so many of us or so many agencies are really not using risk management the right way. And when I heard a guy by the name of Scott Addis, let me show you what Scott Addis, or who Scott Addis is. He was an agent. He was with one of the big organizations in the country. He's in Philadelphia. He built this tremendous agency with like 60 people in it. He sold it to an organization, a bank, but he's still the, I think, the president or the chairman of the board or the thing. He's had an unbelievable experience. I just can't tell you all of them. He's the you saw Entrepreneur of the Year, Inc. How do you do that? 25 most innovative agencies in America, and I believe it. He has just had a tremendous career. His career now is with Beyond Insurance, but it's more than that, because he's got his fingers in about 40 different pies. And I met him. I went to one of his webinars. Seminars. We'll come back to that later on. But that was a couple, 3 years ago. Ever since then, I've been back with my mouth open watching this guy work. And I don't know what motivates him. Whatever it is, it's working. Scott, tell us about Beyond Insurance, will you?
Well, George, thank you very much. I'm very proud to be on with you, and I do want you to offer your wisdom throughout the program. But Beyond Insurance is a coaching and consulting firm, and we're really trying to take people beyond insurance and have them realize the beauty of risk management, the beauty of really having an innovative diagnostic and consultative system. So simply put, it's having people realize insurance is a very important arrow in the quiver, but it is only one of many arrows in the quiver.
Got it. All right, what are you going to talk about today?
Okay, we're going to get into a program which is going to talk about the crucial difference between insurance and risk management. And I'm sure anybody listening today really has a good idea, but I think it's going to be really helpful when we dig deep and say, what is that critical difference? And especially thinking through the eyes of the customer. So many customers might talk about it, but they really don't understand it. Number two, we'll talk about the risk management process. Number three, the consumer's need for a risk analyst or risk advisor. And lastly, 5 steps to become an outsourced risk manager.
Well, that's a lot. You know, this slide right here, difference between insurance and risk management, has confused agents since I've been in the business, which is a long time. What is the difference?
And it's critical we know this. And I'd say whoever is listening, George, as you just said, to think hard, what is that real difference? Risk management is a process, and I think we have to go ahead and to realize that you're talking about a process in risk management, but insurance is about risk transfer. It is paying dollars to an insurance company, but in reality it's about treating risk, but risk management is about consulting and diagnosing. So I would suggest when we get in a little bit deeper, which we will now, consulting and diagnosing versus transferring to another party.
Okay.
If we define risk management, it is the identification, assessment, and prioritization of risks, followed by the application of resources to minimize, monitor, and control the probability and/or impact. So let's go ahead and take a look at each of these words. And in many ways, if you follow these words, you will have unbelievable success in your business. If you have the ability to identify, assess, and prioritize the risks facing your, whether it's a family or your business, that in itself is a differentiator. George, would you agree that's huge if you could help the client identify, assess, and prioritize?
Well, I think every agent thinks they do that, but I don't think they do. You know, it's a tremendous attribute. Yeah, I love it.
And let's assume that one can do that. You can identify, assess, and prioritize, but let's look at the second piece of this. Then you apply resources to minimize, monitor, and control the probability and/or the impact of loss. That's a big statement. I mean, that is really a big statement. So you're assessing and analyzing, but at the same time, you're really controlling the probability of a loss. And I'd also say a lot of us are saying, how do we get the best and brightest talent? What cooler job can you get in the entire world of doing that? I mean, isn't that so precious, George?
Well, you know it is. It's amazing that we haven't really identified this over these years.
Yeah. So if you think about risk and reward, risk and reward is part of life. I mean, you think about it when you're late for a meeting, speeding in your car, when you finally make the decision to skydive or bungee jump or take the roller coaster ride, I mean, you're taking a risk. And each and every day, as individuals running our life, we weigh risk and reward. You really can't have reward without taking risk in life or business. However, we can take actions to manage the amount of risk we need to take compared with the reward we help to achieve. So in some ways, we're actually helping organizations assess risk and not saying they can take risk, but if they do take risk, have them understand what it could actually mean to their bottom line. Now, this is a question that I know, George, you have probably asked so many times in your career because you've been mentoring and coaching for a number of years, and that is what is one's responsibility? I mean, think about it. What is your true responsibility? And I think George, I'd like you and me to challenge the audience today. And some people might say, well, it's pretty easy, Scott. As an agent or broker, my job is to get them a better deal. I'm supposed to canvass a marketplace and see if I could go ahead and broaden the coverage and get a better quote on their behalf. And I'm not saying that's not part of what we do, but I would sit back and say that I truly believe, my heart of hearts, that there's something much, much more significant, and that is protecting the assets of those organizations we serve. When you think about it, protecting the assets, whether it's a family business or family unit or a business, that is a very significant responsibility. And if you think of protecting assets, that goes far, far beyond simply quoting and bidding insurance.
You know, Scott, we all talk about this, we all think about this, we all understand, every agent realizes that he's supposed to be doing that, but it's never quantified quite like this. And that's what I like about it. I mean, if I understand it, and it's out there, and I can see the words and feel them and taste them, and then all of a sudden things come into focus for me. You know, you kind of go through life doing all these things, and you do it just because you do it. That's why I like this talk, because it really goes right.
Thank you, George. And you look on the right, and there's a picture of arrows, and realize that arrow of negotiating, bidding, and placing insurance is so critical. But we're going to talk about today all the other arrows in your quiver, and when you bring out those arrows, you become so potent and so deadly and so appreciated for who you are. So I'd like to go ahead and talk about and ask a question. If the only arrow you have is insurance, and that's all you can do, what can happen to you if that is the only arrow you have? And I would suggest that consumer is going to try to put you into the box, and their view of you and your success is, did you get the better bid? Year one, you could be the hero, but in subsequent years, if all they do is measure you upon the negotiation and the placement, I truly believe they're missing the boat because they don't appreciate who you are and what you can bring, but also it can be a very dangerous game if you're sole focused on placing insurance. And as we said earlier, remember, insurance is a way to transfer risk. Risk management is a way to strategically mitigate risk and manage risk. Okay, one other thing, and George, I'd love you to comment, and that's on producer burnout. I have the pleasure today of traveling all parts of the country, and I see producers, and it used to be someone that might be in their late 50s, early 60s, and they were just fatigued. There was exhaustion, there was weariness. It was almost like the guy you're seeing in this picture. But I can tell you, I'm really concerned. I see people today that might be in their early 40s, late 40s, early 50s. They're so emotionally fatigued right now. They're burnt out. And I believe they're burnt out because every waking day they're just caught in that transactional commodity bidding war. George, do you have any concerns about producer burnout today?
Well, I see the thing is happening more often in the 50s and 60s, and part of that, I believe, is because of the tremendous amount of communication. We're all overwhelmed. Everybody can't handle it. And then on top of that, I'm supposed to be running my agency. I'm supposed to be designing the marketing. Now you want me to go out and be a risk manager and do all that in this process. And I think a lot of the agents are just overwhelmed. I know darn well they are. And I don't blame them. I mean, I'm not pushing them. I get overwhelmed myself, but boy, oh boy, I think a lot of it is because of the and the commoditization hadn't helped them either. So all of these things together, wow.
Well, I don't want to be. You're exactly right. There is that feeling of being overwhelmed, but I hope today people will see how simple the risk management process really is and how it applies. So what is the alternative? The alternative we're going to talk about today. And the alternative begins with one's belief that we must discover the customer. So let's talk about the discovery process. A person who is truly has the goal of being a risk consultant or an outsourced risk manager, They don't make the transaction the centerpiece of their work product. Rather, it's their ability to really discover the customer. It really leads to warmth and confidence. So here's what I'm getting at. The consumers today are expecting us to come in 3 months before the renewal, and the typical conversation would be, George, thanks for meeting with me today. Boy, if you could just have policies available and claim data, we can talk about who we'd approach in the marketplace. And I will certainly critique the insurance program to make sure it's accurate, but the whole focus is really on what? It's on the insurance placement. There's something so basic, discovering the business, discovering the family. When you think about a financial planner or a physician, whatever else, they're truly having the discovery process be the centerpiece. So that's really where we're going to be heading today, is the realization if we're going to be that trusted advisor, if we're going to be that outsourced risk manager, we must start with a very, very thoughtful discovery process. Agree, George?
I'm with you 100%. When I'm silent, I agree with you anyway all the time. But
well, don't fall asleep on me, George.
That it's so obvious.
Okay. Okay, we're now going to talk about what is so logical but so important. I started with Johnson Higgins back in 1980, and the first course I took was CPCU 1. Today I think it's called 552, and they talk about something called the risk management process. It made sense to me then, and I can tell you it makes even more sense to me now. If you follow this process, you will have such a successful career. It's incredible. So let's walk through the process and start at the top left-hand side. I'll very briefly go through it visually, and then we'll get into each step. Step 1, identifying the exposures. Step 2, strategies to mitigate risk. Step 3, implementing a plan. And Step 4, monitoring. So let's go ahead and take a look at each step. Step 1. This is really the discovery process. Step 1 is saying to the customer, Mr. Nordhaus, if you don't mind, our process begins by understanding you and your organization. What makes you different from your competitors? What makes you best in class? What is it about you that really separates you from the competition? On the other hand, from your perspective, are there any issues that keep you awake at night? It's a curiosity and a desire to understand the inner workings of a family unit or a business that separates people. The art of identifying, prioritizing, and measuring exposures is essential. Now, before we move to Step 2, I would like to ask the audience the following. How much fun is it learning about a business and a family? How much is it learning about the fact that Granddad Charlie started the business in 1946, and here's why he started, here's how he started it, and here's how he built it, and here's the challenges he went through in the 50s and the 60s, and here's how the second generation took it over, and why they made this acquisition, and why they divested of this, and why they changed the product line. Would you agree it's absolutely fascinating when you have a chance to really get inside and understand how a business was built? And my second question is, what about the consumer? How much does a consumer enjoy talking about their business? George, what do you think?
I think they love it. I love to talk about mine, and that's because of what I'm so proud of. I love it. Nobody's ever asked me, though. None of my, well, I think most people I deal with in insurance understand what I've been doing all these years, but I hardly ever get asked, let's go to the background and all that. And I feel, flattered. I mean, we're all human beings, and I love to be flattered when somebody talks to me. I think this is one of the greatest steps towards relationships than anything you could possibly do. And I think
exactly. Step 1 is we build relationships, and people have the opportunity of explaining, but it's also essential. I mean, how can you be a risk strategist or an outsourced risk manager who really don't know the family unit or the business? Now, Step 2 is so exciting. This is where you truly become that strategist. You are not selling insurance. You're thinking strategically about the organization or the family. So let's give an example. George, let's assume today that I did a discovery process with you, and you have the Nordhaus distribution organization. You said, Scott, my gosh, I'll be quite frank with you. The last couple of years have been really challenging. 2 years ago we downsized. Our industry got hit hard, and we had to go ahead and lay off a couple people. We don't discriminate here, but I've been hit with an age discrimination case. The other thing is, we have about 25 vehicles on the road, and I heard last week that one of the sales guy's kids, who was 16 years old, drove one of the vehicles and actually ran into a person. And, we do have that one supplier in the Pacific Northwest. If they go down, I think it could impact us. And our experience mod is going up 20-some%. I'm not sure the safety committee is functioning as it should. We're now also having a lot of client information. I don't know if we have a cyber exposure. So if we think about it simply by listening to the customer and understanding what keeps them awake at night as well as their pluses and minuses, you start being able to have information which allows you to think strategically. So for what I just went through, your mind is already saying, okay, you've got a supplier in the Pacific Northwest. What if they go down? How would it impact the operation? Is there a contingent business income exposure? What about the youthful operators operating vehicles? On behalf of the organization, we've got to put a personal use policy in. What about employment practices? They've got to learn more about that because really they've been nicked with a claim there. The experience mod is going up 20%. What's happening here? Is there claims management going on? Is there an effective safety committee? So I will stop there, but you can see how in God's name do you do step 2 if you haven't done step 1? You really can't. Now some people might say, well, wait a second, George and Scott, I know the industry. I really have become a student of that industry. I know the industry, and I don't argue it's great to know the industry, but isn't it correct that every individual organization has a different culture? They have different issues and so forth. So in reality, you really can't do step 2 without step 1. I mean, how do you become a strategist without step 1? Okay, now we move to step 3, and this is so exciting. This is the reward. You are rewarded in step 3 because of steps 1 and 2. You can put in place a picture-perfect insurance and risk management program. The policies, the procedures, the training program all gets put in place. But it's critical, of course, that you do steps 1 and 2 to do step 3. Now, step 4 is also very important. You think about businesses, the economy, they change dramatically over time. Think of where we were a few years ago. We're in much better shape now. Think about the industry a few years ago. Businesses certainly go through dynamic changes. So what might work today may not work tomorrow. So the 4th step is monitoring the success of the plan. What you put in step 3, you must monitor in step 4. So let's take a quick look at the logic of this. You discover the customer so you can think strategically, put the plan in place, and then you go ahead and monitor. But let's ask the key question of today. George, this is not you and me. This is going to be the consumer. If you and I, the audience, as well as George, you and I went out today and we said we're going to go ahead and spend the next week canvassing consumers and asking them the following question: where do you see the agent or broker starting? When people come into you to meet with you, do they ask you to go through a means to really do a deep dive and identify your exposures? Are most coming in starting in step 2 with strategy development? Or do most come in step 3 talking about implementing a program primarily consisting of insurance? George, what do you think?
I see that all the time. People are selling policies, many of them. People are not using this. They're selling policies. A lot of people can sell policies, but not many people can do these. Can do what you just described, or don't, as a matter of fact. And we see some, and I really admire them. I say, hey, you must have gone to school under Scott somewhere.
Well, you're exactly right, and I think where we are today is we've gotten ourselves in a little bit of a quandary, and that is it is the consumer's perception. It is their perception that our primary responsibility is getting a bid and a quote through procuring insurance. Would you agree? That's what they think we do?
Well, no. Yes, I do think that. Am I wrong? You got wrong.
No, exactly right. And it's gotten so bad. If you and I go to a cocktail party tonight, and we're together, George, and the person says, George, I like you, and Scott, I like you. You know, we bid our insurance. We have a March 1st renewal. We bid our insurance. Please come in as soon as possible. We want you to bid our insurance. What step are they inviting you to start? Step 3. Everybody thinks we start in step 3, and if you start in step 3, you're basically saying, I'm a commodity. It's all about insurance, and I truly believe you're missing the essence of who we are as an industry. Step 1 is discovering the customer. Step 2 is strategies. If we start in step 3, even if we win in step 3, we're going to lose in step 3.
Well, the commoditization has done a lot about that. And you told me that you thought commoditization leads to some wonderful opportunities for agents. I don't want to go there now, but this is obviously the Geicos of the world haven't helped this.
Yep, exactly, George. You're so right. And if we think about the art and science of risk management, let's go to another slide before we get there. This is my favorite slide, and in medical terms, a physician does 3 things. They consult, to diagnose, to treat. The plan of treatment with someone who has a medical issue is only as good as their ability to consult and diagnose. George, let's assume that you have some real major back problems. It's been about a month and you're having a hard time getting around. You would go to the physician and you would hope the physician asked probing questions. Mr. Nordhaus, when did this start occurring? And tell me how it occurred. And when you get up in the morning, how does it feel? And we exercise, how does it feel? They're really trying to probe, because what are they trying to do? To understand the diagnosis. And once they understand the diagnosis, then and only then do they feel they can treat you. But let me put it another way. How would we feel as patients if we went in and the doctor did not consult and diagnose and wanted to treat us?
Oh, that's
we would feel very unsettled.
No, that's perfect.
So if we go back to the process, step one, I believe, which we call discovery, is consultation. Step two, which we called the strategy, is diagnosis. And step three is a plan of treatment. Today, I think we have to draw a line in the sand, and we have to tell the customer there is a process. There is a process, sir or ma'am, and I can't do my job if you're asking me to come in and treat, because I don't really understand your business or your family. I need to go through steps 1 and 2. The only objections you'll ever get, by the way, there's 3 objections you will only get. Number 1 is, how much time will it take you to go through steps 1 and 2? Number 2, how much will you charge me? And then number 3, does it make sense? And I've done this now for 30-some years, and I can tell you those are the only objections. How much time will it take? What will you charge? And does it make sense? And we'll talk today about how we can go through each of those objections. Okay, as we move on, the art and science of risk management is encompassed in steps 1 and 2. It is that simple. If you like where we're headed, we'll talk more about how do you go in and really get inside a family and a business through a discovery process. And number 2, how do you think strategically? And I can tell you, if you can do steps 1 and 2, your career will take off. You will have your wildest expectations will be met. Many of you may know I have personally done over $10 million of revenue or $100 million of insurance, and this is all I've done. People give me much too much credit. All I've done is I simply say every day to the customer, I cannot do my job without steps 1 and 2. And unfortunately, most competitors are still stuck in step 3. They may not want to be in step 3, but they haven't figured out how to really explain to the customer they must start in steps 1 and 2. And I do hope this program today is giving you the visuals and the support to feel confident to do steps 1 and 2. Okay, we now move on. And I would suggest that if you start in step 3, it's the beginning of the end of your relationship. You might say, well, wait a second, George, I disagree with that. You know, I want to counsel. And George, please offer your thoughts. You'd be very valuable.
I thought that was a wonderful statement, because it kind of is if you start there. I mean, now it's all about money. And go ahead. But am I wrong?
No, you're absolutely right. But I mean, the point is, you can win in step 3. But if that's a game you're going to play, they're going to say something like this: George, you are just fantastic. You know, when you came here a couple weeks ago or a couple months ago, I was hoping you could deliver, and boy, you did this year. You got me an 8% decrease. Next year, let's say you've had some claim issues. Next year, the account goes up by 8%. And you walk out of the door, that guy Nordhaus, he's not as good as he was. He's lost it. He's really lost it. He is not as good as he was last year, because all we're doing is we're simply allowing the marketplace to go ahead and dictate how good we are as professionals. And I don't want to be viewed that way. I want to be viewed by, did I strategically understand the business and am protecting their risk, and do I have a plan to go ahead and to bring to play with a customer? Okay, the next 2 slides I think really could help, and we're going to take a look at, we'll call a middle market CEO, CFO, or HR director, or maybe even a small business consumer, as compared with a large corporation with a risk manager. So let's take a look, and the first thing is percentage of time. If we went ahead and asked that middle market consumer, sir or ma'am, with all of the hats that you wear, what percent of time do you allocate toward the function of insurance and risk management? Most are going to tell us around 3 to 5%, or they might say, well, not enough time. But if we really drill down, how much time do you allocate? It's somewhere between 2 and maybe 5%. Now, when you look at a risk manager for a large corporation, a risk manager spends 100% of his or her time in this capacity. But now let's look at the next slide, and this is fascinating. I actually went ahead and went through RIMS, and as you know, RIMS stands for Risk and Insurance Management Society, and asked a number of risk managers how they would break down their functions, and they gave me basically 5 primary areas. The first is exposure identification. The second is trying to understand the impact of those exposures through business impact analysis. The third is trying to prioritize exposures. The fourth is trying to mitigate. And lastly, procuring insurance or transferring the risk. But let's take a look at numbers 1 and numbers 4, identification and risk mitigation. That 45 and 30 together, 75%. 75% of a risk manager's time is spent identifying and mitigating, Certainly they're trying to spend a little bit of time on business impact analysis, trying to prioritize exposures, and then also there's some time spent procuring insurance. But look at that procuring insurance. Only 10% of their time is spent procuring insurance. But now let's shift to that small middle market consumer. And George, you know this answer. These are good quality people, as busy as can be. Of their available time, they're spending almost little or no time on exposure identification, business impact analysis, prioritization, or risk mitigation. Of their available time, they're spending most where? Procuring insurance.
Well, that grabs you. That's a great slide.
So my home, as you know, is in Philadelphia, the city of brotherly love, and I'd like to go ahead and talk about 3 organizations. But as I'm talking, I would challenge each of you, wherever you may be, to think about organizations in your neck of the woods. Who are these big, prestigious organizations? So we have University of Pennsylvania, Campbell Soup, and Comcast Corporation. But here's the question. I put it up top. Are the risks of a small and mid-sized organizations less or more important than Penn, Campbell Soup, or Comcast? You're going to say, what a weird question. That's a weird question, Scott. Are the risks more or less important than these large organizations? Let's take a look at these 3 organizations. What makes them unique is that they all 3 have a chief risk officer or risk management on staff. And in many cases, they have a full-blown operational unit who is actually the risk management department. But let's go ahead and suggest the following. At the University of Pennsylvania, we learned today they lost their top professor. The professor was actually, unfortunately, hit crossing a street in Philadelphia and is no longer with us. And Campbell Soup lost a product line, and Comcast lost 1 tower. So the question is, what is the overall impact to a university, to Campbell Soup, and to Comcast losing a person, a product line, and a tower? Is it going to put them out of business, or do you think they can survive? George, what do you think?
I think that I don't think it's going to put them out of business. They're going to survive, each one of them. I think it's not going to be any fun, but I'm not sure what I'm supposed to say here.
Yeah, exactly. But the point is, it's not going to put them out of business. I mean, no. Penn losing 1 professor, even if it's his best professor, is not going to. Campbell Soup 1 product line, or Comcast 1 tower. As George said, it's not great, but it's not going to put them out. But here's the point we're trying to make. Let's take it back to a lot of the clients we serve, these smaller middle market employers. What if they lost a key person? What if they lost a product line or the primary facility? What if they lost a tower, for example? What the point we're trying to make is that small and mid-sized businesses cannot absorb risk as a large corporation can. But the second thing we must realize is they have something else going for them. They have a full-time risk manager where our organizations don't. So I would suggest the following. The risks of small and mid-sized organizations are more important than larger organizations because they can't absorb risk and they don't have a full-time risk manager. And I hope you guys listening say, oh my God, it's an opportunity of a lifetime because once again there's such a need there. The next slide is outdated, and I do apologize. I do hope sometime in my career I have another chance of speaking in front of an audience like this. This was 100 CFOs in the Philadelphia region. This was actually September 10th of 2008. The firm on the top left-hand side is called Chrysler Miller. And they asked me if I'd come in and speak about the state of the industry. And I said, I'd be honored to do that, but may I do a survey when I get there with the CFOs? And let me tell you, go through each one of the questions, and you may be as shocked as I was. The first question was as follows. Ladies and gentlemen in the audience, I'd like you to fill out the following. To what degree do you, as consumers, enjoy procuring insurance? Well, on a scale of 0, meaning they can't stand it, to 5, we got a 1.6. They really don't like it. Let's look at number 2. To what degree do you have the time and technical expertise to identify the exposures facing your business? They gave that a 1.8. These guys admitted they don't have the time and or ability. I wish I could separate that and say is it time or ability, but either way it's an issue. But let's look at number 3. And I don't think Philadelphia is that different from other parts of the country, but we asked, to what degree do you believe that insurance agents and brokers have a process in place to address those exposures? They gave us a 1.3. That to me is very damning. These consumers do not think, at least in Philadelphia, that we have a process in place to identify and prioritize our exposures. Question 6, I still have no clue what this is all about. Who controls the game? They felt the carriers controlled the game, but they felt little control. With all the hats, what percentage of time? They gave us 5.8%. And lastly, question 6, they think we're very transactional. But now for the big question. Is this good news or is it bad news? Is it time to say, you know what, you've got to get out of this crazy business? People don't value what we sell. They don't have the time and ability and all this kind of good stuff. Or on the other hand, might you say, this is the opportunity of a lifetime? George, what do you think?
Well, I think it's you put me right up against the wall, you know it. But I thought I hate to think of us as transactional. I just hate to think of us all that way. And obviously you're making your point. That too many of us are.
Yep.
Or at least they think we are.
Well, let's look at it this way. This is going to be kind of odd. What if each person answered 5 to each of these questions? In other words, the consumer says, I love the bidding process. That's my favorite time of the year. I have all the time in the world to identify exposures. Number 3, I think every other agent or broker comes in is better than the one before. You guys are incredible. I feel complete control over the game. I have all the time in the world. If that were the case, what would that mean? That would mean nothing's broke. Nothing's broke. Everything's working. There's no room for us. But the answer is the game is broken right now. People don't like the way they're being treated right now. They don't have the time and ability, which is a huge statement in number 2. They don't think your competitors are doing it. This tells us right now, and I would say if we did the survey today, it's probably going to be as bad or worse than it was in 2008. Ladies and gentlemen, there's a huge opportunity, but only if we can realize we must move beyond insurance. The other thing I'd like to do is the next slide, and I think this is pretty obvious, but boy, people are juggling more than they've ever juggled before. And George, you said it earlier today, the demands of running a business and a family have increased so significantly. The consumer really, really needs you and me to say, you know what, I will take one ball away from you, and I will take care of this like you can't believe. I will help you manage and mitigate risk. George, would you agree that juggling has become a real issue for companies today?
I think it's a real issue for individuals as well as companies, and I think it's much more of an individual than it ever has been. You know, there's so many one policy people out there and they're really not covered properly. I don't mean to go back to personal lines, but that's the situation. And we're talking about, well, you say business or home. That's good. Feel better about that. But yeah, I like it when somebody comes in and they're going to insure my home and my cars and all that sort of thing. I like to feel I'm getting risk managed instead of bidding. Yes, I love it.
Very helpful. The next slide is really what do results tell us? And there's an opportunity of a lifetime, but we have to realize it must begin with a keen desire to identify the risks facing those we serve. You must realize that there's such a need there, it's incredible. I'd like to spend a moment on the traditional agent or broker, but before we do, if I could tell a quick story. A couple weeks ago, my jaw dropped when I went in and had a meeting at Deloitte in Philadelphia, and we also then got on the phone. You might remember Sam Friedman from National Underwriter Magazine is now in charge of research for Deloitte. And what I've learned is that a number of the major insurance carriers are already thinking, should they bypass us as agents and brokers? Should they go direct to the consumer? Because the consumer seems to be alluding to the fact that they really want us to go direct. And now that's happened in personal auto, as we know, but the fear is it really is leaking into the small and maybe middle market commercial segment. So here's my point. If all we do is sell insurance, not risk management, that is very traditional. If we lack differentiation, creativity, and purpose, we've got an issue. if we can't change the consumer's perception of our role, if we lack a strategy to understand the business, if we lack a unique process, have difficulty building relationships, focuses solely on selling them product, doesn't have a formal marketing or business plan, and isn't considered a trusted advisor, we've got real problems moving forward. So what Deloitte scared me and said, oh my gosh, we have to realize if we sit back and said, you know, this is the way it's been done for years, we gather data, we get bids, we come and have renewals and so forth, the consumer is demanding so much more of us today, we must realize there's a different game we have to play. What we need to start realizing is that we must be thinking outside the box, and if those agents and brokers are not seeing through the eyes of the consumers and not seeing outside the box, some real challenges are going to lay in front of us. So whether it is business or personal lines, as we go back to where we were before, we must realize the responsibility we have to assess the degree of the business. I now, George, like to spend a moment and just try to capture a situation that happened to me a few years ago. And this was a company called Sunrock. Sunrock at the time was, I believe, the 4th or 5th largest manufacturer of water coolers. Now, I was invited into this company, and it was a total mess. You had a dysfunctional safety committee. You had distrust between management and staff. Their experience modification factor over 2, claims out of control. And for you and I to go into this company, every move we made was the right move. So here we are 3 years later, and everything had improved. There's a teamwork between staff and management. The claims had gone down dramatically, productivity up, employee morale. So I was as proud of a peacock about this company. Except what I received at 2 o'clock on a Friday afternoon was a phone call from the CFO named Russ. Hi, Scott, it's Russ. Get here right away. We have a horrific accident. We need you now. Please don't delay. Get here. It's horrible. I said, Russ, what happened? And I heard a click. So all I knew was a horrific accident. Was it a roof that collapsed? I didn't know. Was it an employee injury? Was it a vehicle accident? I rushed to Sunrock. Sunrock at the time had about 120 employees. I go into their manufacturing facility, and picture this as a metalworking shop. Today, these would be made out of plastics. These are the office water coolers. We put the bottle on top. But when I walked in there, on this day, you could have heard a pin drop. Normally, it was like a busy metalworking shop. And when I poked my head through, I saw a person whose hands had been sawed off, sheared off in a punch press. It was a 42-year-old woman. Her eyes are rolled back, there's blood everywhere, and her hands are caught in the machinery. I literally just entered when they're taking her away, and the paramedics are working feverishly trying to get her hands undangled. They get them undangled, they put her in plastic bags, they run behind her, they get her in the ambulance, and obviously their goal is to try to attach the hands. What was weird about the situation is I would say at least 20 to 30 minutes after this happened, nobody had moved. We're standing in the same spot. And I don't know whether people were paralyzed with fear or whether it was disrespectful to say go back to work. But what was going through my mind were 2 very odd situations or thoughts. Number 1, was I responsible? And number 2, what was insurance going to do for this person? So let's go through to question 1. I had sold myself as if you hired me, you're not hiring an agent or broker, you're hiring an outsourced risk manager, someone that will be responsible and oversee the implementation of risk management controls. And the second thing was, what would insurance do for this person? And that's my question I want to ask each of you. What did insurance really do for this lady? Well, I can tell you I've tracked the person, and today, still today, she does not drive. She cannot cook, and she can't wipe herself. Her hands were never attached, and her life has changed forever. But for those on the call, and especially those of you who are relatively new to the business, what do we learn in the beginning? Insurance is amazing. Insurance makes people whole. Insurance puts people back in the same position they were before. And boy, for the first number of years in the business, I kept on saying to my friends, you know what, I'm in the greatest business in the world because insurance makes people whole, puts it back in the same position. And this was a day where I said, that's wrong. Maybe in some situations it can make people whole, but in many situations it can't. And I challenge you listening to look at all the stuff that happens around the world today, and you're going to start realizing, you know what, insurance in most cases can never, ever make people whole. And that was a day where I said, you know what, risk management isn't 2 words. Risk management has got to be inside the fiber of who we are and what we're all about. And I would say it is truly time for a change. If any of you listening today have kind of said, you know what, I just don't like the business as much as I did before. I've lost purpose. I've lost passion. It is time to say, you know what, let's become the outsourced risk manager. Goodbye insurance. Hello risk management. George, I'd like to go ahead and end the program by going through 5 suggested steps to become that outsourced risk manager or risk analyst or risk strategist. Number 1, have a curiosity to learn the inner workings of a business or a family. And not only have a curiosity, make that a requirement. You must educate the consumer. You cannot be that trusted advisor unless you understand their business from the inside out. We'll talk in a few moments about something called GPS. Number 2, learn the art of researching issues. There is a platform I'd like to suggest called a Succeed Risk Management Platform, by the way, that people might want to look at. It's a very good platform. Number 4, you must require the customer to go through your discovery process before the insurance transaction. And number 5, live this 4-step process: discovery, strategy, plan, implementation, and monitoring. Relational GPS, there's 2 acronyms I'd like to give you today. This is one of my favorites, and if you can just live GPS, it's amazing what will happen in your career. If you think about a GPS, we get in our car, we put on the GPS, we're guaranteed to get us where? To a preferred destination. In this wonderful book called Business Relationships at Last, Ed Wallace, the author, says if we can capture the client's goals and passions and struggles, we can get them wherever they want. The discovery process is exactly that. Mr. Nordhaus, I cannot really begin my journey with you and become an advisor if I really don't understand your short and your long-term goals, personally and professionally. I'd also like to understand the passions you have. And lastly, what are the obstacles or struggles you have that might be holding back the business to get to the next level? Putting it another way, if you have a company or an individual's GPS, you can take them wherever you wish. I also have a second mental reminder called I3. I am in the business of I3. Every single day I say to myself, Scott, I am in the business of I3. I'm in the business of uncovering the issues that face a business and the family. That's number 1, is the issue. Number 2, I convey the implications of the issue. And number 3, intervene on their behalf. In many cases, it's not just the issue. You must educate the consumer. So it may be substance abuse in the workplace. It must be a dysfunctional safety committee. It might be a cyber exposure. You have to say, here's the issue, explain the implications, and then as a business partner working in conjunction with the insurance company, we actually intervene on their behalf. So I'd like to end by saying that, George, I'd love your comments here. Most agents and brokers, when they see risks, they tighten up, they get nervous, they say, oh my gosh, the risk, how do I handle risks? I would love if you took a different angle, you raise your hand and said, you know what, that's my business. When I find risks, I'm going to go deep, I'm going to learn them, I'm going to dissect them, and more importantly, I'm going to help solve the risk. So when you see risks ahead, the next sign is going to be fun ahead. There's a great... What do you think, George?
I just think, well, the more I hear this, and the more, of course, I've heard this before, and I'll talk about that in a minute, but the more I hear this, the more I think, how can we get this to more agencies, more people in the agencies? And I get frustrated when I think how good that what you've been saying here is, and it changes people's lives. So let me just say to the agents who are listening to this thing, have everybody in your shop listen to it. It can't hurt anything. As a matter of fact, it'll probably change your agency. So I've been busting to say that. Go ahead. I'm sorry.
No, thank you, George, for saying it. But if anyone likes where we were today, there's a wonderful book out called Enterprise Risk Management for Dummies. Now, the cool thing here is this speaks to step-by-step about the risk management process. But when you see the magnitude, it's put out by RIMS. These are the risk managers. These are the preeminent experts within the industries today, and they're telling you this is the same process they use. This is the process of Fortune 500 companies utilize for their own business. So this is a great book. The only way to get it, by the way, is rims.org, okay? I'd like to spend a moment, if anyone says, my gosh, this is pretty good stuff, just to give you a couple ideas what we're doing. So where can Beyond take you? And I apologize if this is seen as a commercial, but we do have workshops. We'll be in Tempe, Arizona on January 14th and 15th. George came out a couple years ago, and George, thank you. It really is an amazing program. You can learn more by going to beyondinsurance.com.
I can't say too many good things about this. It was wonderful. I spent 2 days. I hadn't been to a seminar in 10 years. I thought, my gosh, I guess I must have missed something here along the way. I had 2 great days. Anybody that misses this and can't afford it or get there or whatever, don't miss it. Go ahead.
The other thing, if any business leaders are on the phone, we have and are putting together a network of innovative and creative leaders. We have 31 agencies around the country, and we're saying we're really going beyond insurance. It is called the Beyond Insurance Global Network. If someone says, I really am on board, I want to find out more, please, you can contact me at any point and say, what is this network you're putting together? It really is more of a process supported by a user group. There is consulting we're doing right now. We are working with agencies and trying to really come in and saying, how do we really help this? And of course, we can support by lots of tools and strategies like a webinar you just saw here. So I just wanted to say, George, you are the legend in the industry for what you've done. Thank you. And I just want to say, on behalf of the entire Beyond Insurance team, having the chance to really passionately talk about goodbye insurance, hello risk management, I just want to say from the bottom of my heart, George, thank you very, very much.
Oh my gosh, it's such a pleasure. I tell people all the time, I don't understand what makes Scott keep working. He's done so very well financially and families and all that sort of thing, and he never slows down. So you amaze me. It kind of embarrassed me. I wish I were a few hundred years younger. I'd be with you. No, this has just been great, Scott, and I hope people will contact you. And I would like to say one last thing before you get your people to listen to this one more time. I can't help but say that. Go back to the email today. Also, you can get the Insurance Community Center's quiz flash there and the tip of the week and all that. And remember, all these are archived, so you can go back to this at any time. They're archived on Agencies Online and also on Rough Notes. So